So I'm about to read an article that I wrote on Intuit stock. And I think this stock is very interesting. Like they own some absolutely amazing companies. But before I read the article, there's one thing I want to ask from you guys. If you like if you like this video a lot and you want to see more of them, I'll post a lot of these, so go ahead and subscribe to the channel. That's all I ask. So to begin, Intuit is a stock that I've been watching for quite a while. They own some absolutely amazing companies that I personally use, and I've been debating purchasing shares of this company for quite some time. Some iconic brands that they own that I'm also a fan of are Quickbooks, which is an amazing tool for small businesses, TurboTax, which is an amazing tool for taxes, Mint, a personal finance tool that I personally use for budgeting, and Credit Karma, which helps people with their credit score, and also Mailchimp, which you will see a subscription form below all my actual articles themselves, as this company, financed by CWT, personally uses them. All of these services have one thing in common. I believe they are in a good position for even more growth than they currently have. Shares of Intuit currently sell at a pretty hefty premium. They trade at 44.08 times their earnings at time of writing, and while that is a pretty large PE ratio, it is important to realize that they are also growing their revenue at pretty large rates. In 2019, revenue for Intuit rose by 12.6%, followed by a rise of 13% in 2020 and 25% in 2021. This is a pretty large revenue increase, which helps justify the hefty valuation. Intuit currently has a valuation of almost $110 billion at time of writing. Intuit does offer a small dividend of 0.70%, which is actually pretty large for a high growth company like Intuit. Intuit has a really high price to book ratio at 6.42. They also have a high price to sales ratio at 8.48, which is not ideal considering that a PS ratio of around 1 to 2 is what is considered good. Intuit is trading at a very high valuation, but it is growing very quickly, and if it continues to grow very quickly, then buying the stock at a very high valuation will become a justified valuation in the future. While I love the businesses under Intuit and want to own them, I do believe the stock is currently overvalued and will personally be waiting for the stock to fall a little bit more before I'm willing to buy it myself. I do think this company could be a good long-term play, so I will be watching the stock for a while more and hoping it gets to a price that I'm more comfortable with. And that's kind of like my analysis on Intuit stock itself. If you like this video, then go ahead and subscribe to the channel and like the video while you're at it. Thank you for listening.